have, Eagles? How's everyone doing? Hi, Patrick, William, Zig, Tom, how are you? Hope everyone had a decent week. Thomas, Simon, all you warriors out there. So, yesterday when Steve was doing analysis, I believe it was this candle, I was talking about the divergence that we had here. You guys remember? Thought it was worth a shot to have a piece on. So then I called Davos, asked for President Trump to make a comment about stabilizing the dollar. We have this pop here. So this pullback is possibly a higher low here. We could do some work in here, but even if we made a new low and it has to do some work here, I'm very skeptical. I know a lot of people I respect are talking, 135 euro down the road, and Blake brought that up months ago. But there are other people I respect, like Grega, that was looking for this. Steve had numbers down here. We have the divergence down here. Just a setup in the market is, I think they're, even if you're constructive, the dollar, it's still hard to buy it after something like this. So very possible. I don't know if you're an Elliottian or not. Even if you're bearish, we could get an A, B, C that could take us back towards, above this wedge line that was like a throw over, or back to 90 anyway. So I still don't think this may have been enough to short the dollar, but I wouldn't do it down here. We could have something like this from here, and it could turn into something major. Something that looks a little bit, and I know certainty is an oxymoron in trading, but I would say what happened here. Yes, we've started. Can everyone hear me?
We can hear you just fine.
Okay, buddy. All right, so, we've been looking and talking about, Steve's been talking about it, a crude top for a while. This was pretty impulsive here yesterday. It didn't quite diverge on this time frame, but to me, this looks like, some type of correction. I look for fib retracements, wrong against this high, but crude could have quite a way to fall. So, if it all comes together, we're going to get a dollar rally, which could pressure crude, commodities. Gold came off pretty good yesterday. And eventually, gosh, even the indices, looks like we're right on the verge of making a new high there. But if you notice, even though we're making new highs here, and I'm not saying we can't blow off again, but the difference in the RSI structure is dramatically different now. I mean, you had all kinds of 80 readings, you had 89, you do 89 on the weekly and monthly, but now we're starting to make new highs under 70. We make a new high here, it'll be under 70. And again, it's my contention that the weakness is the Russell. And it's kind of ironic that it is, because the tax package was supposed to help domestic corporations more. So, we're quite a ways from making a new high here. This was our second key reversal. My belief in 3, maybe we need a third one, but we had a key yesterday, a week ago. Then we had a key the day before yesterday, and the market's higher. But when I look at it, I'm not sure the Russell, even with a blow up in the Dow, and the S&P can make a new high. So we'll see what happens here. But if the picture all comes together, what I'm talking about is kind of a reversal of what's been going on for month after month after month, which included a weaker dollar, which included stronger commodity prices and stronger stock prices. And I think the dollar is the linchpin to the whole deal, that some strength in the dollar would take some of the air out of these markets. Anyway, that's the way it looks to me. But, crude looks like a very attractive short, and still think that what happened yesterday, even though we pulled back, was significant in the dollar. So thank you, everyone, for your diligence and your attention this week, and I'm going to turn it over to Blake and see what he thinks about what's happening here. You know, we have the Trump, and then we have the dump, right, Blake?
Yeah, well, yeah. Good morning, Dale. And actually, we have Donald Trump's about ready to talk to the WEF, or the World Economic Forum, like right now. So we're probably going to see some pretty big volatility here momentarily.
He's going to talk on trade, probably.
Well, you know, we'll see. The thing is we are the dollar's been all over the map. So that's the one thing that we've got to note. Hold on, really quick. Sorry, I'm just listening to the squawk.
No, Blake, the euro did both things that you talked about yesterday. We went to the top first, and then we went to where we thought it could go on the bottom. I mean,
we did.
Both of those scenarios ended up manifesting.
We didn't make it all the way down to this trend line, and that's where I thought we're going to go. So if I had to redraw what I had yesterday, it looked like this, right? It looked like this,
yeah,
like that, and here, let me undo this. It looked like this.
Okay.
And so we
still could go down.
Yeah, I mean, you know, the dollar caught a lot of people off guard last night, and let me you know, point out that we had this big shooting star reversal. Now it's early today. I mean, it's early. What we have right now is we have, you know, obviously a green bar at the moment. Is Asia and Europe really, you know, bought up or sold the dollar, bought up the euro again, but at the same time, it's still very early. We have GDP numbers here in the U.S. We have Canadian CPI. We've got Trump, who just started speaking at the forum just now, and you know, so anything can happen here. We can see some pretty great volatility. So I'm actually going to be monitoring a 5-minute chart on the euro because I think that's going to be probably the most important, and obviously looking around for any type of clues right now, because the euro's come off its overnight highs, which is around 125, but you know, the euro is still extremely strong, and that's one thing that in this, you know, whole move that we've seen, and Trump is speaking right now. He's addressing the forum. So I'll be looking for some headlines here. He says that he's complimenting the historic strides that the U.S. has made in the first year. So, so I guess he's complimenting himself. Anyway,
he's not the surprise.
I hear him on TV, but my TV is slightly slower than the feed that I have here with Bloomberg.
He's his biggest fan.
Well, you know, he's definitely, you know, he likes to talk, you know, accomplishments, and so that's one thing. But that's not important. You know, what's important is what his stance is going to be, whether it's on the dollar or whether it's on trade. And we really think that, you know, trade is going to be something that's going to be a topic of contention in 2018, and how the market's going to take that is going to be really interesting. But one thing that I have to note about the euro dollar and the dollar in general is the dollar has been extremely weak. And so even though we had a key reversal in the euro yesterday, it shouldn't be super surprising that the euro got bought up overnight, just because the trend has been strong. You know, you got a lot of people, as we discussed about it yesterday, FOMO, you know, the fear of missing out on the euro going to 130 this year is so strong at the moment that any dips that we find in the euro dollar are being bought. So do I think the euro can still continue to dip lower towards 121? I do. I actually do. But that doesn't mean it's going to. I just, you know, I think that you know, technically we're a little overdone, but you know, I've been surprised before with dollar strength and dollar weakness in years past. So it wouldn't surprise me if the euro just continued higher towards 120, 125, 126. Now, one thing I want to point out here, and it's interesting because we talked about this in our chat room yesterday. This is a weekly chart of the euro dollar, and the massive multi-year downtrend line comes in at 126. I just got an email this morning regarding that trend line from a bank too. The bank was noting it overnight as well. So it's going to be a pretty kilo. Hold on. Trump praises corporate investments after landmark tax law. Okay. Oh, yeah, he's right now. He's just talking accomplishments. Just but again, nothing on stance yet. But what I want to do again, I want to focus a lot on just an intraday move in the euro. There was something else that I want to shoot. I want to keep an eye on the euro. Obviously, I've got one eye on the euro as we speak. But I'm going to take you over to the S&P because we were having this discussion in our chat room, in our private chat room for ForexAnalytix subscribers earlier today about the S&P, and one of our traders DM me is like, I see a lot of people that are expecting a crash, and I'm like, trying to time a crash in the market it's foolish, and look at the market, it just continues to go higher. But I do want to point out that we have, if you remember the flash crash happened right here, and it was back in 2011. The low following the flash crash to the high in 2015, very close to a measured move at this point, which the measured move takes us to basically 2880, which is about 30 points away from where we're currently at. And in this trajectory that we currently have with the S&P, I think it's very possible that we see that that high first. Now, the one of the comments that one of our traders, Chi, he had mentioned is, so then we expect sideways action. I would say that gains are going to be a little bit tougher once we get, reach that dotted line or that target, which is around 2880, because once we have a measured move like that, we're probably going to struggle a little bit more as far as stocks go. And so that also, if for those of you that are trade equities and you're like, oh, look, here's a triple top in the stock market. Yeah, I mean, it looks like we're marking up some highs here, but it also looks like a bullish wedge. We can continue higher. And like I said, I think 2880 is not out of the question in this bull market, and it could be a very realistic expectation for this continuation move that we've got in S&Ps. By the way, I'm just keeping an eye on the euro with one eye. Nothing's happening. It's just sitting there. It looks like he's probably just still talking about prosperity and accomplishments and stuff. We haven't heard anything on stance. So that's what everybody's looking for, is like, hey, do you have a view of the dollar? Do you have a view on trade? Those are going to be the key components of anything he says today. So now he's talking about trade. Trump tells Davos countries should play by the rules in trade. So he's talking trade, yeah, but what does that mean? Play fair. If he starts with a hard line against China or regarding NAFTA, we might see a little bit of movement here, but we still aren't doing anything. This could be one of those situations too, where we come out of this forum and the euro dollar have 20 pip trading range, and we walk away with no real direction. That's entirely possible. Euro's getting a little bit of a lift. Dollar's getting a little weaker, but nothing to really write home about here. And maybe, the market might also just, end up waiting for the GDP numbers that are coming out. Again, I'm trying to keep a very close eye on what happens here, looking for price action. I'm not seeing. Trump says, I will always protect interests of U.S. and its companies. I mean, it's, you know, some talk on trade, but it's not telling us anything that he hasn't already in the past.
Hey Blake,
So we're
how
not
far
hearing
away
anything.
are we from that massive triangle in the yen on the downside from breaking down?
That's about 108. So it 108, 107. You mean not? I wouldn't say breaking down. It's a test. Yeah, it'd be about 108 yen. That's
So the
going to
range
be
is 108. It's compressing in here, so.
yeah. And, you know, I was talking to a gentleman who really has a lot of ties to China and or to Japan and Japanese exporters and traders that typically like to sell yen. You know, investors that really like to sell yen, buy other assets. I like the dollar yen on dips. They're not interested in buying the dollar yen right now. They are not interested in buying the dollar yen right now. They think that, and the comment is that our president's a little bit too much of a wild card at this moment to take on the risks of buying dollar yen, which is interesting because usually they'd find these levels quite attractive, but right now that is not the case.
Thank you, bro.
No country should be hostage to single energy provider. Again, we're not seeing a lot of movement here. I'm just monitoring the euro closely, which is in essence monitoring the dollar. Dollar Canadian isn't doing anything ahead of Canadian inflation data. It's sitting there. Pound is easing off a little bit, but still it has had a 100 pip recovery, more than that. Yeah, 150 pip recovery off the lows, almost 200 pip. I mean, the volatility in the pound has been absolutely astonishing. Beyond astonishing. The volatility that we're seeing here. This is the 5-minute chart. I mean, we went from 140.80 to 142.80. That's a 200 pip rally from overnight lows, which is wild, right? And I would expect some consolidation. I think that the market probably got caught, you know, short dollars, long euro, long cable. So before we continue in this direction or show a reversal, I would assume that we're going to see some consolidation, and that's pretty much what we're seeing currently. And again, the euro is just little back and forth since he started speaking. Not a lot going on. Not anything of any importance that are coming across the wires. Again, I'm listening to him out of one ear. I'm listening to our squawk out of the other ear, and I'm trying to read what's the Bloomberg headlines that are coming through, which you can see they're right here. I see them as they're coming through. And there's nothing. Let's see. He's talking tariffs right now. That's not affecting the Aussie at all. Aussie's still very well bid. The Aussies had a really strong rally, kind of like resembles a pound. I mean, this is a huge recovery. By the way, for those of you that trade the Aussie dollar, we're following a really nice channel higher. And, you know, we hit the top of the channel yesterday and then almost hit the bottom end of the channel overnight and then bounce right back. It's extremely important to watch the Aussie if we're, you know, while we trade above 80, and we haven't been able to break 80. So while the Aussie's above 80, it's still really well bid. But these are the things that you have to pay attention to, especially if he starts, you know, when he's talking trade. Trump pushes merit-based immigration plan in Davos. Okay, nothing. Euro still trading at same levels. Nothing happening here. And one of the things that we have coming here in about 10 minutes, which I'm going to let Steve take over in about 5, is that we have GDP numbers that are coming out, and GDP is expected at 3%, and Trump is constantly saying that GDP above 3% is achievable. Whether he's tipping his hand to a stronger GDP report or not, no one knows, but that number can be watched really carefully, because the known is the U.S. economy is running pretty hot right now. So a continuation of a strong GDP number would be, good confirmation. And the interesting thing about all that is the dollar really hasn't responded to the U.S. economy being strong. It hasn't at all. The dollar is continue to stay weak. But if we continue to put in strong economic data, it's eventually going to force the Fed to, consider, tightening rates further and quicker. And so if the market, starts to look at, too strong a data coming out from the U.S., they could start reshaping their, their expectations for rate hikes, and then that could be one thing that catches, that has the dollar catch up, especially from these prices. Like I said, I don't know if it's going to necessarily turn the dollar all the way around, but I think those are things that could create a near-term bounce in the dollar. So that's why I think today's GDP numbers might be rather important for the market. Let me see, anything else? Oh, and again, I'm just watching the euro, looking for any comments here. Trump says predatory behaviors undermine global trade system. I think that was an earlier comment. Oh, okay, so I was talking about the Aussie. I'm going to talk about the Kiwi as well. The Kiwi, despite the really weak data, the Kiwi has been in a strong up channel as well. And it really, for all intents and purposes, respected that up channel again yesterday and then overnight. But watch the Kiwi carefully, because the Kiwi dollar has posted some very weak data over the course of the last week. So the New Zealand dollar could be very susceptible. Should we see a dollar bounce, the dollar might respond first. Still looking around, nothing happening here. Okay, so that was it. Looks like he's finished. So nothing happened. So we're looking for GDP numbers now. That's going to be the big one. So the market, no response, no nothing, and that is it. Huh. Well, for all of you who got in front of your computers or got up early to witness a non-event, congratulations, you witnessed a non-event. All right. So GDP numbers are coming up, and that's going to be important. Yes, Steve.
This is the preliminary fourth quarter print, correct? And I think expectations are for 3%.
Yeah, it's the advanced GDP, and the expectations are for 3%. Correct. So that's why these advanced readings are, versus the final number. The advanced readings going to be more, more important.
You know what, guys? I think that besides economic numbers and what Trump says, that we're reaching a point that what Mueller can or can't do with him getting ready to interview him, whether or not President Trump allows of it an interview, that if you think, and the market does think, and there's good evidence in the tax plan and everything, that everything is great and markets rising under Trump, if there's any uncertainty about his jeopardy, I think that could be the catalyst. And, I don't think that's more than a month away. There was an old thing that used to happen in the markets in February. They called it the February break. It was mainly commodity related. So we're only a week away. So I think that's going to be the catalyst. I don't think it's going to be anything economic. I think it's going to be, perhaps some type of constitutional crisis. That would do
Yeah,
it.
it could be. I mean, so, one of the biggest, so for those guys that, don't follow U.S. politics so closely, we got a lot of Europeans and Asians that are listening now from around the world, and Australians, and I just want to say there's people listening in from places all over that maybe don't you hear the threats of U.S. economic politics, everything. But one of the things that is talked about quite a bit is that this FBI investigation with Mueller, and the reason why this testimony under oath is going to be very important, because many people believe that Trump liked to talk out of both sides of his mouth, and he doesn't remember what he says a lot of the times, and he says things that people just want to hear at that moment in time. But even though everything he says, I think he genuinely believes, but I think he, will say things and they may not necessarily be truthful, but in his mind they are, and then he'll go back and say, "Why didn't do that?" If they catch him lying under oath, then that's going to be more of an issue, and I think that's what Dale's alluding to, is that something that that might end up being more of an issue. And you may be 100% correct, Dale. It may not be anything that has with the economy. It may have something to do with our confidence in our current administration. Who knows? But that's in the weeks and months ahead to find it. But maybe that is it. And like I said, I try to be, like I always say, I try to be very non-political here, but that is something that is a concern. I think it should be a valid concern for market participants. So
yeah, there are precedents, like with Nixon. The market didn't like the whole process Nixon went through. So
Oh wait, so Trump is sitting down. He is addressing and asking and answering questions. So yeah, we're gonna have to be still on alert here. Yeah, he's still talking. So he's now it's not his speech, and he's answering questions, and so there's going to be a lot of stuff off the cuff which he can obviously move the markets. Hey Steve, I've got to pass it over to you really quick because I've got to get ready for the GDP numbers.
Hey, great. Have a great weekend, Blake.
Okay, Blake.
Hey, TGIF, and guys, don't forget to vote for us on the FX Street Awards. Steve will talk about that momentarily. Thanks, guys.
See you, Blake.
Thank you, Blake.
How are you, Steve?
Thanks, Steve. Thanks, Dale.
You're welcome, buddy. How are you, Steve?
I'm good. How have you been, Dale?
Good, man. So, that candle we were talking about in the Dixie yesterday, there was just one more candle, another 20 points or so before the turn. I know it's not that impressive of a day, and, I don't think you could, confidently call it a low, but I think
we definitely got an impressive reaction from exactly the area we were looking for. Now, the question is there going to be any follow-through? The answer is perhaps we're going to know in a minute from now, right? Because in a minute from now we have the GDP. So is this enough to tilt the market on the opposite direction? On its own, no, it's not. But if we now, let's say, get an overshot in the expectations for GDP, people might start thinking at least twice about it, and this might prove to be some kind of a short-term low. So we have a few seconds only left, so I think that we should.
So far, an inside day, not great follow-through. So we'll see.
Yesterday's candle, a very interesting one, nevertheless, and let's see what happens.
With it was a positive close, but mid-range. What's it called?
Give me 1 second because we have GDP coming in now, and I'll tell you. Wait. Should be any second now. Unfortunately, Stelios is not here. 2.6. Oh,
Weaker.
much weaker than expected initially. Well, expectations were for 3%, although this is the preliminary. US December preliminary wholesale inventories is plus 0.2 versus 0.4. Durable goods, though, extremely strong, 2.9 versus 0.8 expected. Canadian CPI, as expected, 1.9 year on year, which is exactly as expected. So it's quite a big miss, actually. So far as you see, we're not seeing any real response from the dollar. I mean, it has weakened like very, very slightly, but nothing to write home about. Let's give it a few seconds to see how the market is going to react to this. So far, it seems to be numb. So yeah, GDP underwhelming for sure. Keep in mind, though, this print will be revised another, like, if I remember right, 3 times. Of course, the third one is like in a year from now or something like that, perhaps even more.
S&P's faded on that a little bit.
Yeah, the dollar is not doing much, has weakened very, very slightly, but no real response yet.
Still a higher low.
Yeah, let's go back to the DXY. As it seems, the market doesn't seem to bother so much about it. So yesterday we had a key reversal hammer. Actually, yeah, it's a hammer. It's not a spinning top. It's just above being a spinning top. Fact being, though, that this lower week, especially where it happened, was of importance. Today we came and retested that level once again. We're above it. Listen, if this area holds, this was a very nice area for a bounce. It gave us a bounce that lasted for a few hours. Let's see if it can produce something more than that. Obviously, we need a break above 91 to confirm any kind of a short-term reversal, because, listen, the market is currently, we were saying that yesterday as well, the market is currently trading at very extremes, right? And positioning and sentiment are also extreme. For those to start mattering, we need to see a reversal that will start triggering some stop losses and will start making people reconsider, thinking that, okay, perhaps, you know, this thing has run its course. Perhaps it's time for me to protect my profits, for example. Perhaps it's time for me to hedge or whatever. And that on its own is going to bring, you know, a movement to the opposite direction. For that to happen, in my opinion, a key level for the dollar is going to be 91. We were talking about that on the chat room as well yesterday with Luca specifically. 91 was the previous low here. It's also the high of the consolidation that we had here. So I think that for a reversal to be confirmed, we need a break above there. If that happens, I believe that the rebound can extend more than would initially be expected, simply due to what I said. Some covering, some stop loss triggering, etc. So profit taking, etc. So I think, you know, any reversal is only going to be confirmed above there. Of course, it will be important to close the week and likely close the month holding that low and that confluence of supports. Keep in mind that seasonality tells us that it would be nice to find a high or a low, a short-term high or a short-term low at the very end or at the very beginning of a month. So being specific on that, on Monday, it's going to be the 29th of the month, right? So, you know, Monday, Tuesday, nice period to find the low. Regardless.
Lunar eclipse on the 31st.
Okay, sure, why not?
Yeah, well, you know, eclipse. The eclipse of my heart. I forgot who did that. Yeah, you know, sometimes, I know it sounds...
Bonnie Tyler, I think.
Go ahead, call me a lunatic.
A lunatic, huh? Okay. So anyhow, yesterday Blake did an amazing pattern in play. He actually caught the top here and got a fast 1% profit on that. That was nice. Euro is pushing higher today, but opposite from the cable, which has almost reclaimed, is actually at highs having to do with closing highs, because yesterday we didn't close there. The euro seems somewhat weaker. So perhaps that's also due to some statements that we had post ECB yesterday. One thing is for sure, that both the cable and euro, but mostly the cable that tagged yesterday, the 78.6, had traveled too much too fast, especially for FX pairs, right? So keep in mind that I'm not saying that we're seeing any type of reversals yet here, but keep in mind that even some consolidation might follow. So because the market has two ways of, let's say, correcting. One is in time, one is in price. So if a market is very strong, it does most of the correction in time, consolidating more or less near the highs, or dripping lower, dripping slowly lower. If a market is somewhat weaker, it corrects in price, which means that obviously at current levels, yesterday I was speaking with my best man, and I had told him like a long time ago to diversify to 50-50 between euro and pound and 0% dollar. That was like many months ago. And yesterday I called him and told him that, listen, it's time for you to switch from 50-50 zero allocation to 40-40-20 and start getting some dollars in your portfolio, because I honestly believe that we might not have found a bottom or a confirmed one, but we're not far away from something like a short-term bottom, which means this is not the time to be overly bearish the dollar, overly bullish the pound after the move we've seen, the euro, the Aussie, the Kiwi. By the way, speaking of the Aussie, I want to show you, Blake said that we're still expecting this ascending channel. This is exactly what I have on my chart as well. As you see, we're getting short periods of consolidation and then a thrust higher, and short periods of consolidation and then a thrust higher. Yesterday, actually, I wrote to the chat room, I took the advantage of that huge reversal and I cut off further my Aussie position at the lows. I did the same with the dollar, with gold, because obviously this is a strong market and I'm taking advantage of any weakness, to offload part of my positions. But I have to show you this. This is, we are approaching an area, let me mark it here, this area, which is quite important. Let me show you why. First of all, this is a descending trend line that dates back to 2013. This is an ascending trend line of a potential ascending wedge, because I was also viewing this move in the long term as a potential ascending wedge. Because if you look at this, if you look at the Aussie chart like this, zooming out, you will see that regardless of the short-term moves, let me mark it here, this on a long-term scale has all the characteristics of a corrective move, right? Overlapping, choppy price action. It might seem in the short-term scale like very strong moves are unfolding both to the downside and to the upside, downside, upside, downside, upside. But, bottom line, what
I like that observation.
remains the fact is that
we could do 81, 82 and still be there, right?
as you see here, looking at the beginning of 2016, and you'll tell me, so this is a 2-year consolidation? And then I'm going to answer back, sure. In a downtrend that lasted from 2011 to 2016, a 2-year consolidation is not to be considered absurd or, unexpected. But keep in mind, as you see here now that I'm zooming in, multiple confluences, this ascending channel, that descending trend line, that ascending trend line, that previous high, all of them are gathered close to 81, 81 and a half. Okay, so I'm going to reiterate, you want to be long the O's, etc. First of all, keep in mind that for every strong move you see like this one, there was a previous weak move on the opposite direction and more or less with the same characteristics. So at the very best, you need to be careful and not to be strong-minded in any direction. But second of all, I'm going to tell you that, being long here and not like waiting for a dip lower to find some kind of a support like this support, which is very nice, like 78, 70, 80, makes no sense, because where are you going to put your stop loss, right? So more or less the same applies with the Kiwi. More or less the same characteristics we have here with the Kiwi. If you zoom out, you'll see the exact same thing here, right? In the O's, it's more profound. That's why I stressed it out more. But keep in mind, we're also seeing RSI diverging in the vast majority of the cases. Blake was writing before you read it, Dale, that he has even contemplated to stop trading until the stock market becomes again something that has a two-way price action, because the fact that stocks are moving only in a single direction, and let's be honest, a lot of things are correlated in these markets, even now in the era that correlations for the past few months seem to be breaking out one after the other, definitely what risk is doing is affecting FX as well, because this is a very broad and general thing and theme in the markets. What if risk is on, risk is off? So one-way price action, I don't know even if it's enough to describe this. Just to give you an idea, you can see it here. Weekly Dow Jones RSI at 91.5, right? This is something that we haven't even seen much on cryptocurrencies. That is in a mature bull trend, right? A 9-year bull trend. The monthly RSI is at 90.50. The daily RSI is at 87. I mean, these market conditions, besides being unsustainable, are abnormal, completely abnormal. And that doesn't mean they can't continue for more, but it means that the more they continue, the bigger and unexpected the reaction is going to be at some point in the very, very near future. I'm not saying that we're going to find a major top in the very near future, but there is no question that we're going to see some very violent moves unfolding in the very near term, even if it's 2-3 days of a move. But these conditions are completely unsustainable. I mean, the market has been a one-way train. Price action has been unbelievable. I mean, we have gapped higher 25 out of the last 30 sessions. The futures have opened regular trading hours in positive territory 25 of the last 30 days. This is the most ever recorded. This is the price action of a whole month in the S&P, and so far it's the 26th of the month. We've seen only 2 negative days. In a whole month, we've seen 2 negative days, and if you see, both of them were like a blip. I mean, it's not that they were like strongly lower or whatever. These are not real conditions. These are not real trading conditions. I mean, just if you look at the chart, everything has become parabolic. Everything. Just look at this. Don't pay attention to the price action. Just pay attention to the green line, which represents the angle of ascent. Okay, this is the slope, in essence, of the uptrend. I mean, this is the definition of a parabola, right? Greek word parabole. Because simply it's now looking, it has gone vertical, absolutely vertical. So, you need to be very careful of these conditions. I see extremely experienced traders having very big trouble trading these markets, because you really need some two-way price action to do some proper trading, and there is no such a thing. But this is not something that will go on forever. Just letting you know.
Steve, is melancholia a Greek word too?
Yes, melancholia.
Okay, so the shorts are in melancholia during a parabola. 2 Greek words in 2 sentences. Yeah, I'm learning, buddy.
Indeed, indeed. Let me go through some of the questions because I'm sure we have a lot. Okay, let me open the question box and see what our friends want to look at. Let's see. Question about Aussie. I answered about that. Pound and pound. Yeah, sure. Let's have a look at the pound and the pound yen. Okay. So let's go. The pound. The pound, as I said yesterday, tagged the 78.6. Let me zoom out so you can see it. The 78.6 of the pre-Brexit high. And the good question now is going to be, and probably a good time to draw this, is going to be, how do we look having to do with fib retracements from the major high that we had there? All right, so let's have a look at it. Let me, whoop. Okay, this was the low. Let's reformat this to this. Oh. Okay. Complete the expansion, we don't need it anymore. Okay, so 50% fib, just a little bit higher for 145.40. Let's call it. It was also that low over there. 0.6. That's our next target. But the momentum of the move higher cannot easily resume. So although we have no evidence to say that, oh, okay, you know, if this is a place you should go short, at the very least, I would expect some choppy price action before pushing higher. Not as prolonged as I did, but you get my point. I mean, I would expect that even if the market wants to remain extremely strong and dollar wants to remain subdued, I would expect that, not I would expect, I'm more than certain that the easy way of the move higher is done. That's exactly the reason why yesterday night I called my best man to tell him to change between, you know, 50-50-0 to having some dollars as well, because I believe that the easy part of the move higher is done, which means that in a sense, if you like cable to the upside, you've lost the vast majority of the train ride, at least for some period, right? Now, if we see a move lower towards this area, or for example, let me erase drawings and redraw again. The extension of this channel, for example, okay? If you see a move lower and a retest of this channel, that would be a great opportunity to align with the trend. Depends, of course, of how the price action evolves, but this is a nice area to be looking for that. That also coincides more or less with these highs here. Depends on how fast we get there. So in general, I would say a move back towards the 136 area, or at least towards this little consolidation we had here at 139 at the very least, would be a better opportunity. But the market might do something like this and move higher. Depends on how strong it is. Regardless, there is no reason to be long here anymore at this current juncture. Okay, and I won't change my mind even if we see like a short-term higher high from here, which is not impossible, but I would expect it to be short-lived. Okay, now having to do with the pound yen, whoop, no, that was Greek. Okay, having to do with the pound yen, I have to tell you that Gregor was showing this the other day as well, that he's viewing this as an ascending wedge. I don't know if it's an ascending wedge, but I can tell you one thing for sure. The price action to the upside, although we are still 100% in what is defined as an uptrend, simply because since here we only have a series of higher lows, sorry, right? There's no question about it. But the speed is completely uninspiring. You know what I mean? So the price action here doesn't really inspire like for a strong move higher like the one we had in the cable. Of course, just by looking at what the USD yen has been doing explains why. And I have to tell you that also there's a resistance zone just close here, nearby, like 100 pips higher. So I would be quite careful with the pound yen. Okay. Also, I wouldn't be really looking. I mean, it can definitely move higher from here, but the momentum it has, etc., wouldn't get me interested. Also, look at this. We have been pushing higher, and we're not even at 70 RSI. We're seriously divergent from the high we've seen here. So all of these I find kind of troubling. What's your projection for Aussie if it breaks down? I'll tell you. At the very least, if it remains a strong market and it just produces like a little corrective move lower, I would expect that this move should bring us back to the 79 area, 78.70, 78.60, 79 area here, at the very least, just for a healthy correction. As you see, RSI is also diverging here, overbought, diverging, and as I said, major confluence of resistances like roughly 100 pips higher, maximum 100 pips higher. And, you know, we've had a rally from 75 to 81 without even a breather, in a sense. So any way you look at it, I think that, you know, being long here also makes absolutely no sense. You want to be long, you should do it from lower levels, not from here. And Nick says, Dale, actually the shorts are in phobia. USD Swiss. Sure, let's have a look at it. By the way, before I mentioned the USD Swiss, I don't remember if I mentioned this on the webinar yesterday. I definitely said it on the chat room. Be very careful of the Euro Swiss, huh? Because look at this. I really wouldn't be long here no matter what. I'm the one that was advocating that breaking above here back then at 109 was a major breakthrough, and it would lead to, you know, a move towards 120. But in the short term, this is a textbook ascending wedge, and this was also textbook RSI divergence here, right? Now, if you want to see it as one divergence, you can draw this. There we go. Coach, if I'm not mistaken, you would call this a 3 drive, right? Dale?
Yeah.
Huh?
Yeah. They always end up in wedges or diagonals. Yeah, you could.
Yeah, so be careful. Now, having to do with the USD Swiss, you know, the only thing I can tell you about the USD Swiss is that it's currently staring at the abyss, because I had marked this area for a long time, and just consider that we're currently trading at lows that we haven't seen since 2015, and soon we're going to be trading at lows that are several months before that, and just look at the momentum of the move lower. The next resistance, the next support, by the way, is 92.50. It's the 127 extension of the last corrective move higher, but it's not looking good at the moment. Obviously, the move is overdone to the downside, so at some point we will definitely see some kind of a rebound, something like this. But then this area, the 94.30 area, is going to be resistance. So from this point on, any rebound towards that area, I think it's a very good opportunity to be short. Okay. Kiwi yen consolidating before next move lower. We'll have a look at it now, Dave. Projection of Kiwi correction. Okay, let's look at both of them then, since we have interest for Kiwi. first, let's have a look at the Kiwi against the dollar. Okay, listen, I would say that at the very minimum, I would expect a move back to this zone, the 72.20 zone, to answer your question. Now, having to do with the Kiwi yen, I have to tell you that you can, a correction you can redraw like whatever. I'll have to tell you that the bullish scenario is still not out of the window here because we're holding these highs. So yeah, likely we will go lower from here because likely the corrective move was something different than this because we satisfied the minimum one push higher that we needed there. But I would really want to see 80 break to confirm a move to the downside. Until 80, as long as 80 is holding on a daily closing basis, I would be very careful here because you can view this as a range in essence, as you see. There it is. Okay, so
Steve, Mark is here. I wouldn't mind getting started a little earlier today because I have something at the bottom of the hour.
Absolutely, absolutely. Okay, give me just 1 minute then.
Okay.
The question about pound Aussie and pound Kiwi. They still look good. What's now this level for support? 175.60 for the pound Aussie, pound Kiwi. We found resistance yesterday. I told you that yesterday we were testing resistance. For me, this is a very important zone. We got rejected. We're pushing higher once again. If we break above this resistance zone, call it, let's say 94.50 roughly, I think it looks good for new highs. Okay, that would also bode decently well with a pound and the euro that are more or less consolidating and the turn lower, for example, in the Aussie and the Kiwi. But logic says that for that scenario that I just described to manifest, it would be good to finally see at least some limited risk aversion in the markets. Okay. Thank you all very much. Have a wonderful weekend. Don't forget, it would be an honor if you voted us for the FX Street New Contributors Awards. I'm going to put the link in the chat in a couple of minutes. I need to find it in my mails. And we'll see you back on Monday. I enjoy the interview with your guest, Dale. Thank you, mate.
Mark Newton. CNBC contributor Mark.
I know. I'm following Mark, and I'm going to be hearing the interview 100%.
Okay, and Majid, as far as gold's concerned, you may want to just sign up, take the trial. Some great outlooks from Elliott Wave, from Greg on it. Okay, Mark, I'm going to make you the presenter. Welcome back to our community, buddy. How are you? Hi, Mark. We can hear your voice.
I'm unmuting him because when they call, now he's self-muted. I unmuted him because when they call through, they need to be unmuted. Now he's self-muted. So Mark, you need to unmute yourself from the panel.
Okay.
There you go. We
How
can
about
hear you.
now? Can you hear me now?
Yes, perfect.
Okay.
Perfect.
Mark.
Wonderful.
Welcome.
Happy New Year, Mark. How are you?
Thank you very much. Happy New Year to you and everybody else, Dale. Thanks for having me on today.
Great to have you here. So what's on your radar? What are you showing us right here?
Well, this is a weekly chart of the Bloomberg Dollar Index. So I typically utilize this as opposed to just the DXI just because it has a far lower percentage against the euro. And so
more balanced measurement.
That's right. It's about 30. All of them are high against the euro. This one is about 30 though, versus over 63%. So I mean, a lot of them look very similar. Obviously, we've been in a fairly steep, decline since December 2016.
And so, what do you think? Are we nearing the end of this portion of this dollar decline? Commercials have been. Specs have been huge net longs in euro and everything, and they've been right. It's a great lesson that the small spec and hedge fund could be right, that the commercials have deep pockets, and they could be wrong for a long time. But now I'm thinking we're getting pretty close. Looks like you have a 5 coming up here.
Yeah, that's correct. So in this count, I utilized a lot of DeMark as overlays on the underlying price. And so we're at a 5 count, which means potentially we have another 3 to 4 weeks of pullback. It doesn't mean it has to be as extreme as we've seen this week, but it is likely that we go at least a little bit lower before we see an immediate reversal. And I would argue technically just getting down under the lows from last September is still, fairly negative. I have a graph of the sentiment that you mentioned against the the euro, the non-commercial, the spec longs, and it's interesting that you look at the fact that we've just gotten to really new highs. And so if you look at things technically, yes, we are really at highs here, but still, go ahead. But I would argue that this really can continue a bit longer, and so I think it's going to be mid-February that we turn. I don't know that it's going to be imminent, that it has to happen right away. So even if there's a little bounce, I still think there's probably a little bit further to go. And the charts in the euro actually support that. And if you look at things like the euro against the U.S. dollar, you see that we're still early in the count to really peak out, and so a lot of that still can make the case that we can move a little bit more to the upside. And so here's a chart. Let me widen this out. Okay.
Yeah, some people were talking 26. I believe that would be about 61.8 back from the whole fall from 140 to 103.
Yeah, I'm looking at not only, on a daily chart, you can make that case. On a weekly, if you go back just since 2008, where we peaked out in the euro against the dollar, this whole downtrend hits right near 127.
Okay, interesting.
And really, the counts on a weekly basis are at a 10 and 11 here, along with a DeMark 5 count in a green. So this means that there's likely another 3 weeks of gains in the euro versus the dollar. So I see it going from 124. Any minor pullback here, you'd still be a buyer of euro and think that we get up to 126.5 even. So 126 to 127 is an area. But really sometime in the middle part of February, I think that's a time you want to fight the trend, and really is still a little bit early here.
Anything else setting up for mid-February? We're parabolic in the market. I wanted to ask you, how do you explain the relative weakness between the Russell and all the other averages? And then if you go inside something like the NASDAQ, one of the darlings, Tesla, is not participating and looks like it could be headed down for a breakdown.
Yeah, the markets obviously have been quite resilient, and so overbought conditions have been a constant concern for anybody that's really looked at equities since the beginning of the year. We're up over 6%. We're really right at an area now where there's a couple different cycles that are coming in that could have importance in the next 3 to 5 trading days.
Interesting.
So I think it actually could be a little bit earlier with regards to when equities peak. And specifically, there are a couple different things that have just started to happen that are a little bit of a concern to me. One is that the transports have started to really show signs of deterioration of late. We've seen the airline pull back. We've seen the move down and the rails. And so this has broken the...
Yeah, and semis got killed too. But yet, trannies are, according to Dow, they're the leader, right?
Well, both semiconductors and transportation stocks tend to be leading sectors. And so, as you mentioned, the semiconductors, we have what I think is a false breakout, got right up to right near 1,400 and now have snapped back and have actually violated not only the trend from January, but gotten beneath this area where we broke out. So I view this as a short-term negative for both semis and transportation. And really the builders are the other group that are starting to, as of yesterday, showing signs of breaking out. So breaking down.
Could that be oil?
Oil. Well, I don't know. This is just recent that this has happened. These have been, builders and oil have been going up at the same time for the last few months. So it's tough to all of a sudden just pinpoint that on oil.
Okay.
The one thing I would mention is that Treasury yields continue to rise, but we're close to getting DeMark sells in Treasury yields, at least on the 10-year. So I think there's going to be one final push up to right near 270 in the 10-year, and then we're going to show signs of peaking out there. And so, as you see, we're right near the former highs from December 2016 and also March, which were 265, and we got above really those prior highs, 262, 263. We need one final burst higher in yield, and that would give us some type of a signal there. And what's interesting is that some of the defensive groups have recently started to show real strength, and so that is an area where you know, that's interesting when you look at things like, and bear with me 1 second. So here's a daily chart of the XLU. So you can see we've broken out of this downtrend from, you know, the middle part of November. It's interesting that the defensive sectors are strengthening.
Yeah, the utilities, right?
That's correct.
Okay.
Utilities, also the REITs. So the REITs are also strengthening, and you've seen telecom also. So Staples started the process last week. We saw signs of Staples bottoming out in relative terms versus the S&P. This week, it's been utilities, it's been telecom. And so I view that as being really interesting, and the fact that consumer staples versus the S&P got right down to prior lows, and we've had a decent bounce off that level. And the defensive stocks have acted far better than what should happen on a big surge in equities.
Yeah, interesting.
So for me,
and the VIX is not making new lows, Mark.
Yeah, the VIX has been quite constructive. That's a great point, and I mentioned that in my piece a couple days ago, that the VIX, you see the VIX having bottomed in early January at already under 9, and now it's shot up and it's around 1150. So this is a very constructive pattern, but it's really constricted over the last couple of years. You see that the pattern of declining highs and the lows have been right here, but I think this is setting up for an upcoming breakout to the upside. So I do think there's going to be some above average volatility in the month of February. So I like positioning, really buying vol, buying puts in general, getting long Vega and Gamma, just buying options in general. I think should be the way to play this market versus trying to reach for the S&P at current levels.
Yeah, interesting, because almost everything you brought up says there's a defensive move coming in utilities, and staples are safety, and the Dow's been the leader. They're the blue chips, and more of the spec arenas are beginning to get some pressure, and one more push up in yields, and that'll be it. Do you think if we get a bond rally and yields peak up around where you're looking for, Mark, that we could come back and negate the breakout at 265 and really have people wrong-footed, and that it could be a significant pullback in yields?
Yeah, I am not sure I'd go that far just yet. I think that it's probably going to be a minor pullback. I do have respect for, you know, the weekly move that occurred in Treasury yields. If you pull up a weekly chart, you can see, I mean, this is a fairly substantial breakout that we saw from early 2014. So initially, you know, if this gets up to 270, I think we probably pull back to 250, but the move clearly is to the upside. It's a decent breakout. And so the longer term area is right near 3%.
Doesn't it? Yeah, okay. 3%.
Yeah, the longer term on a monthly, if you look back, going way back, you know, that's clearly a longer term. Let me see if I can get the right chart here for that. So, yeah, that I mean, going back since the mid 80s, you know, that's up right near 3%. So we'd have to get above there to think that you have a big surge and really start to materially change things. So getting up above the area that was in early 2014, 305, that would be a big signal that yields likely are going to start a very lengthy intermediate term rise. And I think that's a little bit premature just yet, but we'll wait and see, you know.
Any view on the oil shares? Because here's another case where it proves how deep the pockets of commercials are in the oil market, that they've been short. They have record shorts, even more short than they were at 140. And the market definitely accelerated. So I'm wondering if the oil shares, which have been pretty good performers over the last several months, if they're showing any signs of getting tired.
Well, one thing that's interesting about the energy space is it was obviously one of the worst performers last year. And so right around late August, early September, we saw that start of mean reversion. And, you know, obviously we've had a big move. And really it's been a lot of the integrated and E&P names, it hasn't really been the oil services up until recently. We've just seen that move in Schlumberger and Halliburton and some of the big oil services names, but this is still really early to think that there's a meaningful peak. We did test the former highs and things like XLE, but you look on a longer term basis and it's really still quite constructive in terms of what's happening on a monthly basis. And, you know, my thinking is you could have an equal wave move potentially of what we've seen there. January, February tend to be very bad months for energy in general, and this has been, you know, it's really defied expectations. So XLE on a weekly basis, going back since 2014, I mean, that's a fairly decent breakout that we saw late last year. We're testing these highs, but I can't say with any certainty that, you know, the move is over and that you want to turn down. I mean, I think I'd want to see that in crude first, and until you see that, and then move certainly is still very much to the upside and crude. So there's really been no evidence of any real deterioration there.
When I was coming in up in the business, there was a traditional February break in commodities. What's your take on gold? Gold corrected a little bit here. The gold shares have been underperforming the bullion itself. Wondering what your view is with what's happening in the miners.
Well, we very well could play catch up in the miners. That's correct. And the miners have underperformed the physical, you know, the commodity a bit. I like gold in general. I think the dollar's decline is not over, and I don't see much more move up in treasury yields in the short run. So I think if 270 is a cap and the dollar keeps going down and yields turn down, and that's going to be bullish for gold. And so we'll finally see, you know, that breakout of what I think is almost an 18-month, you know, cup and handle pattern in gold. So if you look at weekly charts of it, you know, it really helps to put this in perspective in terms of where we've come. This is the peak in 2011. So we did break out really last July, August of this longer term downtrend. Since the peak, we've consolidated and now we're testing it again. So this formation for me is pretty constructive. And if we get up above 1370, then we could have a serious move in gold that'll at least get to probably 1550.
Yeah, I agree with you on that. Yeah. So anything else on your radar? I mean, you and I think just broke a record for covering the most markets in the shortest amount of time.
Right.
I mean, I think we've talked about everything. Anything else that you'd like to bring up? And perhaps you could show your website and your service, Mark, and how people could reach you.
Sure. Yeah. So, you know, I tend to be still bearish on the dollar. I like the euro. I think commodities are in a bottoming process in general. I think that instruments like the DBC are a great way to play the space. You see the CCI index, which effectively has broken out. So I think there's an interesting way to play that. And obviously the liquid ETF DBC will give you exposure to that, and right now it's around $17. It's very liquid, so I think you probably can get up to the low 20s if we have the kind of move. I think now the grains obviously are a bit premature.
Boy, are you a mind reader? I was just going to ask you about the ads. Go ahead.
Yeah, so we haven't, you know, everybody's talking about La Nina and the potential of cooling waters in the Pacific, and it's already affected Argentina, you know, and so I don't know that. You know, eventually I think that's going to happen. It might be postponed until maybe midsummer. I think there's an interesting move that could happen with a particular cycle in coffee that, you know, might produce a decent move. But, you know, the softs have not been as, at least majority of them, sugar and coffee, have still been not doing all that well. And the grains in general, when you look at things like corn, it's just been a tough market to really buy. It's really been the base metals, it's been the energy, and it's been, you know, obviously the precious metals now are starting to show signs of strength there too. So that's you know, I think.
And the Chinese have been stockpiling wheat big time. So yeah, and you're right, La Nina, the impact is usually in the summer, where you don't get enough rain in the Midwest during La Nina years. Yeah.
So it's been an interesting move this week, but in general, you know, I think in equities, go ahead.
Is there anything you don't watch?
Well, I try to cover it all. You know, equities, commodities, currencies, treasuries. I think the yield curve is sort of at an interesting spot. That you know, when you take a look at what's happening, I mean, the longer end has been really continuing to flatten out, whereas the 2s, 10s has really been stabilizing a bit. And so, for me, that's sort of interesting. And you run longer-term monthly DeMark counts on what's happening with Treasury yields, and you see that right now, for the first time, we have. You know, let's pull this up so viewers can see this properly. So, first of all, on a daily basis, we've been flattening all of last year. With the Fed almost 100% certain to hike in March, it's thought that, you know, we're going to continue to go down to zero, and that might happen. But this pattern is starting to show more signs of stabilization in the short run. And you know, historically, when we started to see a steepening in the yield curve, it coincided with the you know, the prior market pullback in 2007 to 2009, as well as 2000 to 2003. And of course, those are from inverted levels, but it's still interesting when you look at you know, the signals that are now apparent. Let me see if I can pull up the monthly.
You know, that's a pearl, Mark. So most people are worried about the market when the yield curve is flattening or inverting, but you're saying that that the market is in more trouble when the yield curve is you know, expanding.
Well, here's the 2s, 10s curve. So you see what happened from 2000. We actually bottomed out and we steepened dramatically throughout the entire equity market sell-off from 2000 to 2003, and then we pull back. And so there have been pretty decent signals with regards to DeMark, which coincided with the bottom. We have TD sequential buys right at 2006. We started to steepen. We got sells in 09. We got another 9-count sell set up. And then now we are on a combination of both TD sequential and combo buy signals, and they need to be confirmed, of course, before you can really make anything of that. And so it's going to require, you know, that daily chart that I showed earlier to really turn up and for us to really get over almost 72 basis points, which would take out that former high. If that happens, then yield curve would steepen dramatically. And so, you know, that's something
you know, that's counterintuitive because, you know, people that are long financials have been waiting for the yield curve to begin to steepen so that banks could make more money. But you're saying that as it steepens, the market may become more vulnerable rather than as it flattens.
That's exactly right. I mean, who knows how many times they're gonna hike this year? It's tough to say. I think if the equity market does not sell off materially in February, then we probably will get some evidence of we'll see a hike in March, and maybe that causes the final washout in this before we start to steepen. I've just been watching the daily chart of the yield curve, and I think it's interesting because it's certainly setting up like something different is brewing than what people are suggesting.
Yeah, what a great overview, Mark. I'm so glad that you agreed to come back and, you know, give me your thoughts going into 2018. What's the best way besides @Mark Newton on Twitter for people to follow your great work? And
so I have a website that I run, and I do consultancy with a lot of institutions. I provide technical analysis for you know, both institutions and retail, and so people can sign up and get a free trial to my site. I provide daily and weekly commentary, as well as usually a 5-minute video every morning that covers all different types of markets. And then we do conference calls every Thursday afternoon at 1 o'clock, just like this here. So I'd invite everybody to come to newtonadvisor.com, or you can email me at info@newtonadvisor.com, and I'd be happy to add you to the list for a trial, or send you some of my reports, or figure out a way that we can do some business.
Yeah, listen, Mark is a must follow on Twitter, and I would encourage people to try his trial. At the minimum, you'll get hooked, because I'm hooked, and I need to talk to you every quarter, Mark, and I appreciate and appreciate you always being willing to come on and edify our community. I hope this is a great year for you, buddy, in every way, not just trading, but in every way.
Well, thank you, sir. No, it's always a pleasure, Dale. It's great to be on, and I'm looking forward to coming on again soon. So thanks for having me.
Yeah, thanks so much for all the crystallizing of some things I was thinking about and opening my eyes to things I hadn't considered. And you know what I call you, Mark, like it or not, you're my trading warrior brother.
Likewise, you as well.
All right, buddy.
Well, a big fist bump for 2018, and let's all make some money. A safe, happy, and prosperous 2018 to everybody.
Thank you so much, Mark. That's it for our week. Everyone have a great weekend. Luca, everyone, remember, most of all, don't just count your pips, count your blessings, and go to FX Street on your Google account and vote for ForexAnalytix as best new contributor. And enjoy your weekend, and I'll see everyone on Monday. Adios. Thank you, Mark.